You see the same typical mistakes that hurt traders, and most of them, we can split them into two categories. We can say on the technical side, we can say on the psychological side. On the technical side is just the inability to learn or to take time to learn. Everyone wants the get rich quick formula. Everyone wants, hey, this is the secret strategy. This is the secret entry setup. This is the secret pattern. And honestly, you need to take time to learn the skill of trading, right? Technical analysis or technical analysis, is a skill. And like any other skill, it takes time to learn. It needs to be learned in a very specific way. If not, you're going to be in trouble. So I think traders rushing through that process is one. And then on the psychological side, which is always going to be more prevalent, it's just, not sabotaging yourself, not, dealing with emotions. Fear and greed are typically the two main factors that move traders. It can be fear of missing out. It can be fear of getting involved. So fear of missing out is, you enter a trade too early because you don't want to be left behind, or you enter a trade too late because you saw a move and you're upset that you didn't get a part of it. So now you kind of emotionally jump in. Fear of being involved, right? You have a perfect setup in front of you, but you're nervous because you don't know what the result's going to be. So you skip it and all of a sudden it becomes a winner. Moving stops back because you don't want to take that loss. Taking targets early because you're afraid that the profit is going to leave you. Those common mistakes have not changed since the beginning of time, and we still see them every day with traders that traders out there.
I teach them a simple risk management technique, and they all do that really well. What they don't do really well is follow the rules. So I'll say, let's say it's a channel breakout system, and I use a lot of channel breakouts. So if it gets to this level, they buy, and if it gets to this level, they sell. All their orders are canceled if close. Okay, so they'll buy it. Usually they enter the trade with high discipline. But I think, as you know, once somebody puts on a trade and they actually have money at risk, their IQ is cut by 70%. So their IQ will go from 125 to 25 immediately upon entering the trade. And at that point, all their self-discipline is gone. That's it. So they're going to do one of two things. They'll come down to their stop, they'll cancel the stop order, and they'll lose more money. Doesn't happen too often with my students. But there's another serious mistake. Let's say the thing goes up, it goes in their direction. They have a nice $1,000 profit. They take that $1,000 profit. That's a mistake too, because then when it goes up to $10,000 profit, I look at that as a $9,000 loss. They'll take profits too quickly, and they'll say, "Well, Courtney, you can't go broke taking a profit." And I'll say, "Yes, you can, because you have to pay for all those losing trades." So your profits have to be bigger. You can't take quick profits. You got to go for big money. Day trading is different. Day trading, swing trading, you are going for small profits. But position trading, you got to go for the maximum, biggest profits you possibly can. Don't take quick profits. Follow the system, because it'll make you a lot more money. And people find that very hard to do, to accept big profits. They I can take big profits. No, they don't. They take the quick profits, because then they take the $1,000 instead of hanging on to make 10,000. Why? Because then their ego is gratified. Oh, I had a winning trade. I made $1,000 today. No, you didn't. You lost 9,000 because you should have made 10 grand.
I know it sounds stupid, but the biggest problem with trading and the biggest mistake that they make or approach that they take is trying to make money instead of not trying to lose money. I know it sounds like that sounds crazy, but if you can just focus on not losing money, making money is going to be inevitable. And what people don't realize, as a trader, what you really are is a risk manager. And you're not, professional traders are not going in with a mindset of, how much money can I make? They're going in a mindset of, how much money can I not lose? And still, like, even if you was breaking even over a 12-year period, what that means is you're trading consistently, which is the hardest thing to do. And if you can go for a 12-month period and not make any money, but not lose any money, you're actually doing phenomenally well, because you've got a system that's consistent. And all you've then got to do is optimize it and tweak it to make money. And guess what? the exponential results of that is going to be phenomenal for you. So I think going in with a mindset to make money is the very approach that's going to stop you making money, because you're trying to focus on some kind of outcome rather than the process of consistent trading. And that's going to keep you going round in circles all the time. It might be a 6-month circle, it might be a 3-year circle, but over time you're going to be no better off than you was at the start. And that's because you're focusing on how much money you can make instead of how much money you can't lose.
First mistake probably would be to listen to books rather than the market, right? So that's one thing I took quite a lot of time to get over. I was, by the way, I was brought up in Singapore. And so I had spent the first maybe 16 years of my life in the education system, reading books, being told what to do, how the world is. So that was how I naturally responded to the market when I first started trading. I thought the books would tell me how to trade. And so I followed all the typical technical analysis setups, in technical indicators, and I kept stumbling, but I didn't understand why. I was following the instructions, but I was not getting the result, a positive result. So the first big obstacle that I faced was being able to let go of the idea that I could be told by a set of instructions how to trade, right? So I had to let go of the idea that there was somebody else somewhere, some expert, some market wizard that could tell me how to trade rather than learning for myself. So it was quite a difficult adjustment period for me. So this was somewhere in the middle, maybe like 5 years after I started trading, when I started to realize that I had to figure this out for myself. Books were great, courses were great, they have their place, but to be able to generate alpha from the market, I think a lot of it has to do with self-learning, right? So going back again to books and courses, I think these books basically tell you the answer, right? They give you the answer, this is what you should be doing. And then you're waiting for the market to ask you the question, which answer should you apply to this question, right? So it's similar to school where you're given the answers to a formula, and then in the exam, the teacher asks you, okay, what is the answer to this question? And then you give the answer, right? But the market, it does not work this way. Right? So trading does not work this way. In trading, you not only don't know what the answer is in advance, you also don't actually even know what the question is. So you need to figure out what the question is and then find the answer, right? So long story short, I think getting over that way of learning is one of the biggest obstacles I overcame at first.
Well, blowing up the account is not the mistake. It's what led them to blowing up the account. Something that I see all the time, and especially with my students, where I urge them not to do it. I literally, I warn them all the time, and they still go for it. Is number one, overusing leverage. Okay. So, and this is a two-part. There's two mistakes. So the first part is overusing leverage. So in crypto, we have this platform called BitMEX, and essentially allows you to use 100x leverage on crypto, which I think is insane, because I've seen so many people blow up their accounts just simply because if you think about it, if a crypto just has to move 1% and you're blown up in at 100% at 100x leverage, and sometimes that happens in 10 minutes, in 5 minutes. So you're really gambling at this point, right? And I've seen all kinds of stories. He did a cruise account, I think, from $4,000 to $30,000 without any leverage, just using my techniques. But then he got a little greedy and he started using margin, and then he blew it up to zero. And then he threw in another couple $1,000, he blew it up to zero again. Why? Because he started using margin. Because all of a sudden, your downside just becomes so extended. And this happens on the small scale and on the big scale. It was actually maybe a month ago, it was in December, I was at a Hollywood Hills party, and I met this guy who his friends introduced me that he made like over $10 million during the crypto bull run. But then he also lost almost everything in 2018 because he leveraged. He used extreme amounts of leverage on BitMEX. So I guess, one of the questions you sometimes ask is, what quote I live by, right? And for me, that is really stunts may win battles, but consistency always wins the war.
in trading, you're going to have, usually people engage in trading because they have a strong level of interest in it. Now, every individual possesses their own natural gifts. And so ideally what you want to accomplish as a trader is not try to take something that, somebody told you in the chat room and force it into your brain and try to apply it. You want to engage in a process that ultimately merges your natural, unique skill set, the unique way in which your brain works to that of market behavior. So you want to engage in a process that really brings those two together, because that is where you're going to be in a position of optimizing the unique workings of your brain and how you think, and that of market structure. Okay, so this way you're getting both.